Welcome to another episode of Boom and Bust. I'm your host, Tony Clement. I'm here at the News Forum where all voices matter. It's time for our monthly chit-chat with Thomas Caldwell. He, of course, is the chairman of Caldwell Securities Ltd. In Toronto. Always lots to discuss. Welcome back to the program, Tom.
Thanks, Tony. Good to see you.
First general question. Obviously, it's been a while since we've been able to have this conversation. So what do you make of the latest economic indicators for the Canadian economy? I'm thinking about the inflation rate and anything else you're monitoring.
Well, Canada and America, as you know, they're quite different case studies. The Canadian economy is actually slowing. The numbers are getting skewed a little bit in that we've had pickups in oil exports through the Trans Mountain Pipeline. So that's sort of maintaining our dollar. If you look at our interest rates, they're almost about 75 basis points, 0.75% under the U.S. comparable rate. That's kind of strange. Usually when you have that case, our dollar is weaker. And the reason it's not weaker, because of high-speed money moving around, the reason it's not weaker is because exports in the energy sector have picked up. So that's kind of masking what's really going on. But underneath it, the Canadian economy is definitely slowing.
Yeah, you get that sense. The inflation rate numbers that came out the last little while seem to show some slowdown in that rate as well. Is that correct?
Well, the thing with inflation, first off, it's a lagging indicator.
Right.
And it can be moved around very quickly. We've come through a period of very, very high inflation, and the current numbers are not as important as the past numbers. People are living with the inflation that's already baked into the system. They're already dealing with grocery prices, dealing with whatever. So the inflation number looks as if it's coming down, but people are in fact struggling. And when they are struggling, you're going to have labor going for additional significant increases, threats of strike with CP, et cetera. And that can give inflation a boost again, but they're different kinds of numbers, if you will. But like it or not, inflation is already here now, and people are living with what we have now. If you have 2.5, 3.1, or whatever percentage numbers you've come up with, it really doesn't matter. The struggle is on right now for the average person.
Are you at all concerned about the levels in the stock market?
Not really. We had that downdraft the other week where a very significant decline. And everybody said, it had to do with the job numbers in the States. And I don't believe so. I think it had more to do with companies like Intel having significant layoffs and the chip area flattening out for a period of time, for a whole host of reasons. So it usually when you have bad job numbers, the stock market goes up. And the linkage is that if you have bad job numbers, usually interest rates come down. That's good for stock market. So it's counterintuitive, but that's the linkage that cooks them all. This time the job numbers were bad and the market went down, but I don't think it went down for fundamental economic reasons. It went down for market reasons. The magnificent 7 stocks, these microchips, the NVIDIAs, et cetera, got slammed after the Intel news, and that just flattened. And also, if you kill the winners, it takes the steam out of the rest of the stock market.
Right.
So it was essentially a market phenomenon, and actually the markets have bounced right back to cover that downdraft. So it was market versus economy.
Right. So what explains the bump up again? Is it just a leveling out or a stabilization?
Well, my opinion, which is not necessarily from Mount Olympus, is that people are losing or have lost confidence in governments, certainly in Canada at all levels and in the United States. I mean, we watch this soap opera that's going on forever down there. People are losing confidence. If they lose confidence in governments, they lose confidence in the system and in fiat money. And we've just talked about inflation a little bit. Inflation has been and always will be a permanent fact of life. So I think what is happening is that there's a lot of cash in the system. There's a lot of money around. People are looking at real assets. The only way you can protect against inflation is owning stuff, whether that be real estate, whether that be stocks in good companies, or gold, and probably to some extent even crypto. So what I think you're seeing is a lack of confidence in governments and fiat currencies.
Right.
And people are trying to own stuff, looking forward to this inflation factor that's going to be continuing with whatever government gets in the United States.
We're going to take a brief break, Tom. We'll be back at you after our messages. Stay with us.